Up, everybody. So I haven't been able to do the financial show until now, which is I planned on doing it a while ago. I was supposed to do charting last time I left off, but I'm back and I'm going to explain exactly what's going on from my view, my opinions on the market and where is it going and what is it that I'm playing. So we're going to start off with the first biggest thing, biggest criminal out there, the Federal Reserve. So the Federal Reserve announced that it was going to start not QE. Chairman Powell said that it was not going to do QE4. He made sure to say it again and again on in Denver, October 8th, that they were not going to do QE. $60 billion that they're going to start rebuying again of the balance sheet. They're going to add to the balance sheet. They're going to buy treasuries. Dude, they're going to buy back more debt. $60 billion, just that alone, a month. So they stopped tightening. The pattern was when last year, the balance sheet was an autopilot, meaning that they were going to bring it down. They were going to bring it down and to normalize it, meaning that they're going to have zero. That was the plan all along from when the financial market started. All those years ago, that was the plan. It was going to go back to zero, normal, because they're not supposed to have any debt. You're not supposed to monetize your own debt, which is something I touched on. So he announces that this is going to be they're going to start doing it, and that they're going to be data dependent. So the Fed is going to have the meeting on the 30th, 29th and 30th. I expect them to cut rates. From August to September, gold has been staying in range, and if you're doing options, you're in trouble. You're not going to do very well because you needed to break out of range. It still moved 10%. Jenga and Nugget and stocks still moved 5%. But in that time, it was more losses than profit for any one of us as trading options. The only way you're making money is if you're adding to your positions on gold stocks, silver stocks, those miners. Then you're fine. You don't have nothing to worry about. That's perfect. You should, if you want to take the steady and for sure route, buy options. Charles Schwab came out 2 weeks ago in their earnings and announced that they were going to do zero commission on trading stocks, buying and selling stocks, and it's 65 cents for every option you buy, which is great. Prices are coming down. That's something I credit Robinhood with. And the reason Charles Schwab said that they were going to do all that was because there wasn't that much money for them in there. It was better for them long term to just make money on fees, which makes sense from their position. They have one of the biggest portfolios, trillions of dollars that they manage. Perfect sense, makes sense. So what happened that day? TD Ameritrade, E-Trade, all these platforms got hit 20%. They went 20% down, bear market territory. Why? Because they make money off commissions. So now what I advise everybody to do, everybody that takes my advice, I told them it's very simple. You don't want to use Robinhood anymore to buy and trade stocks. You want to have it in the bigger platform. You want to have it with TD Ameritrade. You want to definitely have it Fidelity. They're number one. They have the most millionaires in there, so you want to put your money where the money's at. It's safer because Robinhood doesn't have that kind of portfolios. As I showed in the video in the very first episode that I did, when I wanted to make sure you guys understood how Robinhood works. TD Ameritrade did the same thing, zero commission now, so you could put your money there. E-Trade did the same exact thing. One started, they all go. The other one that just came out, Square, on the Cash App, they're allowing you to buy partial stocks. I don't have it, but it's something great if you want to buy a piece of, an Amazon, something bigger, whatever you want, you could buy, a partial share. It's good. And you could trade in their currency, you could switch it around. I never use it, but something came up, so I'm going to inform you guys. So if you're going to trade stocks, I recommend you use those platforms. Thinkorswim platform from TD Ameritrade is the one I use, and I have E-Trade from my work for the company stocks that we buy in there. So the Fed is going to announce, most likely in my opinion, like I've said, they're going to announce interest rate cuts. Another 0.25% they're going to cut. I'm assuming that's what the market is expecting as well. last meeting he said that there was no need for cuts, and that's why gold sold off. The gold market took a pounding that day. Here's a gold chart. It's only 6 months. So let's do 3 so you guys can see the candlesticks a little better. So they announced rate cuts and then the market took a pounding. It was like the lowest it got was, from what I saw, was 1550, 80. High, low. 1428. Okay, so that's where it got. It cut it. You know, this is August. So that was the bottom. Went all the way back up, and then September 20th? It's always at the end of the month. Here you go. They announced it, came down, and bottomed out at 1470. And then it started to pick up back up again. And then they announced again that on October 8th. Okay. So it started bottoming out. This is why I say that the gold has bottomed out. Gold bottomed out to me, in my opinion, it bottomed out already at this range at 14.8 when Powell said that they were going to do another round of QE. They're not QE. They can't call it QE4 because of Donald Trump, our president. It's putting so much pressure on them that they got to change the name and they don't know what to call it. So it can't be QE4 because he's been bagging on them to do it. Begging them to do it, and they haven't done it. So now they started it. He announced that they were going to start to buy them out October, which became a big thing. So that's when, in my opinion, gold bottomed out. I told them, like, you know what, buy now because it's not going to go lower anymore. There's no way gold is going to go lower at that price because he just gave you the signal that it's going to stay at that level. Because they're creating fake money, buying the debt. They're printing out the money in the computer and buying the debt, the treasury notes, to cause the inversion of the yield curve to go up, so banks could loan out money to everybody else around the world. So that's one of the things that they're doing. So the Fed is going to most likely announce that day. Here's a balance sheet. Okay, this is the Federal Reserve's website. And it states here, the Federal Reserve's balance sheet has expanded and contracted over time. During the 2007-2008 financial crisis and subsequent recession, total assets increased significantly from 187 billion in August 2007 to 4.5 trillion in early 2015. The then reflected FOMC meetings balance sheet normalization program took place between October 2017 and August 2019. Total assets declined in under 3.8 trillion. Beginning in September 2019, total assets started to increase. So there's a Federal Reserve, they're going to have to tell you the truth. So think about this. From October 2017 to 2019, their goal was to decrease the balance sheet to back to normal, zero. They couldn't do it. And they can never do it. Down the road, down the years, probably what I think is going to happen, they're going to have to restart something up because this fiat currency is, it's not the first time fiat currency fails. It won't be the last if they keep trying. We keep trying it. But then they started it back September, so I was wrong. It was September, not October, that they started buying back things. So there it is, millions of dollars, and then boom, back up we go. That's nuts. We got nowhere. So look, all time. Boop. Now we're going back up. I was listening to Bloomberg on Tuesday. I believe it was Tuesday on my way to work. Early in the morning. The guy said something spectacular. He's like, oh, yeah, the Fed is starting to normalize its balance, increases its balance to a normal rate. I'm like, what? These are people that are traders, they pay them money to analyze all this stuff. And he said it's to normalize it. And I'm going, whoa, what do you mean? You can't, the normal is nothing, and it's not supposed to have any of that. That's normal. But he's saying that it's supposed to go up again because that's going to be the new normal. Makes no sense to me. Makes zero sense to me. Because that's not normal. Doesn't make any sense at all. And one of the other reasons the balance sheet is increasing this year to date is because of the repo market. So what the repo market is banks loan out money to one another for cash purposes. They need liquidity. So you go, overnight to the market. You're like, yo, you call up your boy, whatever bank it is. Say Bank of America. You're like, yo, can I borrow some money? I'm running low on cash. People are taking out their cash. So can you let me borrow it? It's just overnight. Normal rates go for 1.8% annual percent rate, which is nuts. But the banks, they take care of each other. They're fam. So what they ended up increasing the rate on it. So it went from like 1.8 to 2, then from 2 to 5, and then from 5 it went to 10. Damn, I should have brought it up. Should have brought it up. No. Oh, sorry, let me bring it up. There's an article that he wrote. He did a great article recently on MarketWatch. Damn, I should have brought it up. Oh, here. Okay, so this is what he brings up great points in this article. If you can read it, if you have a chance to read it, you should read it. What the crisis, you ask? After all, we live in an age of trillions of dollar market cap companies and unemployment at 50-year low. Yet the Fed is acting like doomsday clock has melted as a result of the nuclear attack. Think I'm probably mode? Far from it. So this is a repo market. Unless you think the biggest repurchases repo effort ever surpasses the 2008 financial crisis. So this is a chart that he brings up. This is when the market was crashing, which makes sense, Rates went up to borrow overnight. All of a sudden they hit 10% annually. To let each other borrow money overnight. It's just overnight. Think about going into a payday loan, right? You go to them, you give, I don't know if you've already done it, but you go to there, you see your check and they give you the loan for that amount and you have to pay them back. And it's quick. And the rate's enormous too. So they give you the money, then you're on your way. And then the morning you have to pay them back the money, plus the interest rate. So think about it. If you go overnight, just the thought of itself is nuts. That the bank doesn't have enough cash or enough in its bank for you to take out your money, for other people to take out their money. So they need liquidity. So what happened? Nobody was letting people borrow the money. What they ended up doing was simple. The Fed stepped in. Instead of letting people borrow at 10%, which no one's going to borrow at 10%, because if you let them borrow the money at 10%, there's a good chance that bank is going to go bankrupt. That's why you don't do it. That's why banks don't let people borrow billions of dollars overnight for that long for that period, because something's wrong with that bank, and they could file bankruptcy, and then you're out of your money. Since no one was lending the money, the rates kept going up. In China in 2015, it went up all the way to 23%, 23 to 24%. So we're in the ballpark, and everybody was freaking out because the banking system was going to collapse. So the Fed stepped in because they don't want that issue. They started pounding money into the system. They started off with $75 billion a day, and it was supposed to be temporary. It was supposed to be only October 10th. It was supposed to end. It's only going to be a short time period. What happened? They expanded the time frame, and then they ended up increasing it recently. The New York Fed announced to $120 billion a day, and it's only for a night. It's only for the nighttime. It's only when you go to sleep and wake up. Imagine you go to sleep, wake up, and next thing you know, the bank that I think is doing it is, I think it's HSBC, Hong Kong, because they use the dollar. So think about it. They need the cash. They don't have it. They have a bunch of assets around the world, and people are trying to take out their cash because of everything that's going on in Hong Kong. The Federal Reserve is ramping up the amount of temporary liquidity injected into providing it for overnight lending markets. People are like, well, it doesn't make sense for them to be loaning out money. Why would anybody want to loan out money at that rate? Because the alternative is going bankrupt. The alternative is going bankrupt, and you're not gonna go bankrupt when you know you could just borrow the money. And I guess that they're oversubscribing it, so they're putting more money in there that they need to make sure that other banks come in and grab more from it. It's crazy. So all this creating on the per money, what it's doing is devaluing the dollar. That's why I said it also. When he announced the 60 billion, that devalues the dollar. That's like cutting interest rates without cutting interest rates. Just like when they were selling their treasury holdings, all their debt assets, they were increasing rates. That was the way everybody saw it. They were increasing rates when they were selling. Now that they're buying, they're decreasing rates by buying the bad debt. So that's why I'm saying that this is the bottom. I don't think gold is going to go lower than 1480 is. Right now it's trading at 1507 as you guys saw on Market Watch. I think on Bloomberg it's 1505. It varies on the websites, but very, very minute. So that's why I told everybody this is it. So then you have Brexit. Brexit's supposed to be scheduled for October 31st. They try to delay it, but it looks like it's looking still as October 31st. If I'm correct on that. So this next week that's coming up is a big week. I have a few options in there for that week. I have options for the 8th. And the best options that I'm buying, and if you want to try this, is on November 15th. Because you're going to get a bunch of earnings from the gold miners. Right now, AUI had a pop of 150%. It's expected to be negative if it turned positive, so that's why it's such a big jump. American Eagle, the miners, they ended up getting 10%, so they're doing good too. Almost everybody right now, gold miners are doing more productive. They already bought everything a long time ago to be more efficient while they're mining gold. So that was a great pop. With all this that the Fed is doing, with the overdraft, with the repos and everything, they're doing 200 billion. Nuts. That's more than what they were doing in the financial crisis. So this balance sheet is gonna go up hard. It's gonna, in no time we're gonna get there. It's insane. But they're gonna do it. It's just gonna go up because they're putting so much fake money into the system, and the more money you create, the less your currency is worth. A weaker dollar is good for gold. A weaker dollar is good for emerging markets. A weaker dollar is good for oil. Inflation's gonna go up. It will. You can't keep going. With all this, they're doing it is 100%, 110% of our GDP of what we output. Most of it is government lending. It's not corporations anymore because we're in a manufacturing recession. And manufacturing is about 10-11% of our economic data. I mean our wealth. But yet we still are. We just started it. They keep saying that there's gonna be a quick recession. Nobody knows that. We don't know that. No one could never get it right. We find out we're in a recession after the fact. By private organizations, because they're not Fed. It's never gonna tell you that we're going to a recession. It just doesn't make any sense. They say it, it's over. Japan has a GDP of 225 from their debt, right? From everything that they have. So people keep saying that, oh no, it's normal. We still got a lot of room to go. We have a lot of room to go. We still have 100% to go. Because Japan, they use Japan as a measuring stick. Because Japan is a great thing. Sorry, a great country. They have a surplus. We have a deficit. We have $1 trillion deficit. The number just came out. $1 trillion deficit. We're nothing like Japan. We put Japan, that's why, because our rates are so low and everybody wants to sell to the US, so everybody's rates are low. Doesn't make any sense. But they have to do it since they want to export. It's not going to go well for us. It's just not going to end well. Which is why I'm doing all this, trying to educate you guys the best that I can with all the news that's coming up. It would have been easier if I would have done this beginning of September and just kept up with it, but it didn't work out that way. So the consumer is 70% of our economy, right? That's what everybody puts their hats on right now. Every time you hear anybody, there's always a bullish case. The consumer is good. The consumer is good. The consumer is good. They could hold up the economy, but for how long? So Yelp comes out. This is Bloomberg. Yelp comes out and says a gauge of U.S. consumer and business activity shows signs of lackluster economic growth in the third quarter, aimed headwinds from the biggest cities in California: San Francisco, San Jose, Los Angeles, San Diego, we're starting not to spend money. California is the biggest state, the richest state. Blah 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 blah. Whatever you want to say it. We're starting to slow down. We're not buying as much, and I keep telling people almost everyone that I know is in debt. Credit cards, the only thing rates that are going up right now, everything, they're cutting rates. The one thing that keeps going up are your credit cards, because they're based on the market. The market decides the rate. So if everybody's lending, everybody's putting something in debt, and people aren't paying, the rate goes up. It's set by the market. When the market sets rates, it's because of everything that they see. So if you don't think I'm lying, if you don't have, the only way you're doing good is if you have a 0% for like a year or 2 years. If you got that deal, then roll over that day. But you look at your other credit cards, the ones that aren't, they should be higher. Year to date, they should be a lot higher. Everybody's. So the index compiled on online activity by about 37 million monthly app users and 77 mobile web users, mainly track consumers' interest in business survival. While it doesn't represent growth domestic product, the GDP update comes from official third quarter GDP data October 30th that economists project will show growth slow to a 1.5 annual annualized pace. That's down a 2% rate in prior quarters that was already the second weakest since 2016. San Francisco, San Jose, San Diego, Los Angeles, Sacramento was the other one. Biggest retail's taking the hit. And you guys won't see it. Milwaukee. Sorry, far from Silicon Valley. Some of the best performing metro retailers to the end of 2016 have been the Northeast, including Pittsburgh, Buffalo, Portland, Maine. Milwaukee has been the top spot for 3 of the last 4 quarters. But it's going to start here in California and then it goes all the way around. Same thing with the subprime mortgage rate. It started in California, Orange County, where I'm at. And then it carried on to everybody else. Because prices go up higher here first before they go anywhere else. Homes and everything else. Values. QE is good for the rich. Plain and simple, because as the prices go up higher, because more money you print out, the more inflation, it goes up in price. So if you're rich and have property, you should be happy with it. Everybody in the middle down is gonna get crushed. And this is gonna happen to everybody. And why is Yelp? Why is Yelp a big thing? Because Yelp, everybody uses it. The reviews are there. Restaurants, everybody's plugged in. Everybody gives up their information. So that's a big, huge worry, in my opinion. Which is why I keep saying, everybody that I tell is the best options that I'm seeing for gold miners, the ones that I like, the best one I think is GDX, in my opinion. November 15th. That's what I'm shooting for. That's what if you want to try and get in options, it's gonna be November 15th. If you don't want to do that, just buy stocks little by little. All these platforms now give you the ability to buy them commission free and sell them commission free. So you're keeping your money. It's safer to buy the stocks. It is. You will avoid all these dumb things. Like, here we go. The next thing that has affected all this is this crazy thing. In the beginning of October, it's been this. Phase 1. The trade deal. Right? Highly anticipated trade deal. I was waiting for it too because I just wanted to get it out of the way. All these are just temporary headwinds. Brexit and, China trade war. It was a by the rumor, still a fact. Everybody knew it. We all were expecting it. That's why the market that day, when they were going to announce the trade on October, 2 weeks. Hold on, sorry. Look at it. October 4th, October 11th. The trade deal was going to be announced. It was a big deal. Market kept rallying. Every time they announce, every time Trump says anything positive about the trade deal, market algorithms or people that are buying, the market goes up. Every time it's worked every year, and every time that happens, gold sells off. I'm like, great. Starting October, like we did August, September. I'm like, this is great. In option trading, again, you lose your money if you're out of the money. It expires. Your options will go worthless. So they announced this partial trade deal. Trump originally wanted the whole thing, but apparently, it came out that his advisors convinced him to do a partial deal. Why? Plain and simple. We're never gonna agree to the big things, IP theft and all these, transfer of property, all these things. You're not gonna agree to them because China's not gonna allow that to happen. They're just not. They've been stealing from the Americans the technology and everybody else. It's just a fact. Yeah, they became, they're better at making drones or whatever, or the new missiles, whatever. But it started off with them taking from us. It's just what it is. It's not that big of a deal, but they're not going to agree to that. Trump wants the farmers to, because they're taking a beating. They're not going to vote for him because they've been taking a beating this whole time. They're mainly the ones suffering. They're mainly the ones that voted for him in. He's like, they're going to buy $50 billion worth of soybeans. Soybeans and pork. Wow. What's going on is China had to come to this deal because they were buying, when the whole trade deal started, they bought it from Brazil and Argentina, the soybeans. They were buying so much because, they have so many people that eventually even Brazil and Argentina told them, yo, we can't keep selling you pork at this rate, and soybeans, because prices go up and they still need to feed their people. If you're feeding Chinese people to make money, but your people are starving, no one, people are going to riot. Revolutions can start. So they cut back on it. And another thing that happened in China was the pork market. Half of their pork died overnight over infections or diseases. So half of the farmers that their pigs lived, they became millionaires overnight because the others were wiped out. It's just what happens. It's just what, so China needed the pork because people want their pork. So now they knew that they needed it. Trump has been begging, in my opinion, our president negotiates with himself. He always goes to the camera. China says they want to deal. China says they want to do this. Every time the market's taking a tank, he'll go up to the microphone and say, they want to make a deal real badly. They want to, they're ready to make a deal, but do I want to make a deal? All these things he always says. So I knew that eventually, the trade deal was going to get done. Not done. But the only thing that they were going to agree on was selling the soybeans and selling pork because they needed it. China needed it. And once he said that they were willing to accept a partial deal, I'm like, yeah, he's gonna sell us out. He's gonna sell out the farmers. He's gonna sell us all out. And if they were to buy the $50 billion that he claims, $40 billion to $50 billion, our prices will go up from soybeans to pork and everything. And then everyone's gonna be a little upset about it. Plus, who the hell knows if China could really buy that kind of pork and soybean and actually use it all? Don't know. But the high anticipated trade deal was, being announced, and everyone thought it was going to be a deal. But it was going to be a deal that could only disappoint. A full deal, not a partial deal. What happened? Partial it out. Phase 1 out of 3 phases. So that gives hope for everybody else that, quote unquote, we're going to get it done. And it's all agriculture. It's all just, buy back from the U.S., pork, soybean and pork, and and then they'll lift up some tariffs on us so they could buy stuff. That's it. It's the simplest things. It's not IP theft. They're saying that they're working on it. They're gonna come to the deal. It hasn't even been written out, but it's gonna get written out that they're gonna have a meeting in November in Chile and they're gonna sign it. Xi and President Trump. That's it. They're not gonna agree on anything more than that. The higher the levels go. They were at 1.90% done last year, or last year, I believe, that the trade deal was going to be a confirmed thing. That the last 10% that was the hardest part and they couldn't get it done. So why would they do it? If they're doing it in parts, do you think they're going to get to the end still? I don't. Because the biggest things are those. They know it. Pence knows it. Penn had a speech that he gave recently, 17th. Phase 1 deal, China agriculture purchases next month. Chile move on. Tackles intelligent property theft issues. Dividing the world's 2 largest economies. That's our biggest issue. It's been that. President Trump believes that China wants to make a deal. He remains optimistic that not only can we complete phase 1, but that we can move on to structural issues and describe a year ago and spoke about it again today. There are challenging issues of the reality of intellectual property theft, like Pence said following his speech hosted by the Wilson Center in Washington. There's more to his speech. If you want to look at it, you should. But that's all they're gonna agree on, and that's the thing. So gold is rallying, dude. Friday, right? No, Friday. It's doing what it needs to do. It's rallying. It's picking up its theme. 5-day chart. There we go. Okay, so it's rallying. Here's a big spike, right? News of Brexit is coming out. That the Parliament is not going to give it a thing, so they might do a hard Brexit on October 31st. Even Germany is expecting it for them to just leave like that. So it starts picking up. The macro indicator is starting to turn positive. The volume is still low though, but it's starting to turn positive. Truth indicator, true strength indicator, sorry. It's starting to flip back up too. So it was turning up. It turned up the heat to 1517, 1520, which is what I expected. Gold and silver is rallying at the 3%. Gold was up 1%. I'm like, perfect. This is normal. This is a good rally. Gold still needs a lot more to catch up. 2-to-1 ratio. So we need 0.5 more. And everything's going great. What happens? Around this time, Trump comes out. Yeah, phase 1 is getting done. The market sold off on the same exact, or went up on the same exact news that's been going up for 2 years since 17, since it started the trade war. Every time. So I'm like, great. Something came out. I'm like, something came up. But the way I see this, when every time this occurs, is when the movie I keep referring to, The Big Short, what ended up happening was there came a time where they were frustrated. So everybody that was betting on subprime mortgages, Steve, all the characters, they knew that the market was going on, something's going on, but the price kept going up higher, and they had to keep paying, and they're not coming down. Why isn't the subprime mortgages coming down? They're panicking, they're upset. This is what I feel like right now. What they did in that movie was they went to Vegas and they found out that they didn't know, and actually all the banks were short buying now those subprime mortgages on other companies and other banks, because now they realized that everybody was leveraged. That's what I feel like is going on right now. With the Federal Reserve, everything that's going on, with everything that's Trump's going on, with these Brexit and all these little headwinds, they're going to get settled out. They're not going to be a headwind anymore. And the market is always going to dictate what's going to happen next. Meaning that for me, gold and silver are going to go up in value. Value companies, stocks that actually make money, are going to generate profit, are going to be extremely they're going to be the new play again. Because people are rotating out and going back into growth. Companies that only generate revenue, their top line, subscription growth, all these other things. That's what happens. The other thing that's going on with all this is the Brexit news? Oh, IMF comes out and says that they lower their expectations. People are like, oh, they always lower their expectations for growth, global slowdown. Then they dropped this. In September, Germany increased gold reserves in September for the first time in 21 years. That is a massive deal. Germany is the biggest economy in Europe. I think it's the third largest in the world. Could be wrong, but I'm pretty sure I'm right on that. They increased their gold holdings. Turkey increased their gold holdings. Russia and China have been doing it. Germany has bought gold. Central banks around the world are going to start buying gold again. In the US, no one's really buying gold because people aren't buying gold. But other nations are. China still does, as people are buying gold. But the central banks are buying gold again. For Germany to be buying gold is because they're sick and tired of what's going on. I imagine, that's just an opinion, that's not normal, and everybody knows it's a big deal. A lot of people are saying that this is the end of the fiat currency. Deutsche Bank came out and did an article saying that if the fiat system fails, which they expected to fail, you will need gold to restart the system up again. They dropped that article like 2 weeks before this news came out. So they bought gold, and Deutsche Bank is the biggest bank out there in Germany. A lot of people are shorting it. It's a bad bank, but it's still their biggest bank, and if it gets in trouble, I'm pretty sure, just like we did in the US, Germany will bail out its biggest bank. Most likely it will. So to me, this is another sign that something is going on around the world. It's not normal. Something big is coming. The Federal Reserve is never going to tell you that something's going to happen. In November 2007, Bernanke said that the market wasn't there was good. They just expected a little slowdown, not too bad. What happened December 2007? We were in a recession. They're not going to come out and tell you. You need to put the pieces of the puzzle together on your own. And then put yourself in the spot where people aren't expecting it, but when it happens, boom, you generate profit. You make money. You put yourself in a great position. That's what matters the most. You. When everyone's losing, you'll be winning. So that's something that's key, you should keep in mind. China and Russia is still adding. Germany is gonna continue adding. I'll be surprised if it's just a one-time buy. Turkey's gonna keep adding. Countries like Canada that sold all their gold might want to be buying. Gold in Japan, gold in India, gold in other countries is a record high, and Australia too, compared to their currencies. Not against the dollar, but it will. The dollar is gonna be the one that collapses. Let me pull this back one time. Oh no, I'll leave that there. So you guys, if you guys get a chance, just read this article. It's a great article. Talks about everything that I'm bringing up. I'm bringing up different pieces. I'm grabbing everything from all these other websites. And I'm just reading the news, and I'm hearing the news, and I listen to Bloomberg. I listen to all these people from Fast Money, Mad Money. Anywhere I can, I get news, and I read it because I want to put my family, I want to put myself in the best position, and my friends in the best position to make money off of this, because it's gonna end badly. They can't keep doing it. It's nuts. Oh, here. This is awesome. So this is a market a year ago. Powell came. We started rallying. We had this V-neck rally. Oh, let me bring it up and Thinkorswim. Okay, download. Okay, so this is a V-neck rally, V-neck bottom. Boom! And then we went all the way up. Okay, so this is what he's showing you guys in that chart. Paul came out and said that, the balance sheet, the decrease of the balance sheet is no longer an autopilot. Boom! Everybody started buying. What a time to be alive, December 21. He goes on to explain the Fed meeting. He cut rates. No one expected the rates to be cut. Oh no. Powell Fed meeting. Powell 60 million. Powell Fed meeting again. Powell ready to act. This is in front of Congress. Powell Fed meeting. Powell Fed rate cuts now. Goes up. Rate cut 1. Goes down. Goes down. And all this time it went down. People were, Trump recession, Twitter. Rate cut 2. Repo goes down. Now he injected $60 billion into the market. The other thing I want to bring up is last time they did cut rates, so we got squished real good, was the dollar rallied. I don't think the dollar's gonna rally again. Okay, the last two ones everybody expected them, because after we got the first one, it rallied hard. Then the last two, when they cut rates, it went down twice. It went down. The poor gold went all the way down to 1480. And the lowest that I saw was 1450. It has to be here because of these spikes. It wasn't. Oh, this is 5 days. I'm not gonna find it like that. Sorry. 3 months. It rallied, went down. 1465. That's the low that I've seen it at. 1465. If I could draw the line here, I would. At the bottom. That was the low. Because look, they cut rates September? Something? September 18th. September 18th, here you are. Then it went down, 1496. Then it started going back up again. After they were done cutting rates, it bounces back up. Gold bounces back up. Twice that happened. Last time the dollar rallied though. I don't think it's gonna happen again. I don't think the dollar's gonna rally again. I think that was a one-time thing, especially with all the new money that they're injecting, 200 billion of stimulus. There's no way they're killing the dollar. They're devaluing the dollar. That's why I don't believe that it's gonna do that. This time I believe when they cut rates on the 29th, 30th, plus the Brexit news, I believe gold is gonna go up now. It's gonna start going back up. When it goes up, there's gonna be correction markets. Gold's not gonna rally all the way up on its own ever. I mean, no, there's always gonna be corrections. The part where I'm looking to get out, not get out, but sell my contracts, November 15th. If I have November 15th, the ones that I have November 15th, will be the peak. Around 1560, I'm gonna start looking to get out from these positions. Maybe sell half, like I said. Put that other, divide that money. Leave half in the account, half in my bank account. It's most likely what I'm gonna do. But if it keeps rallying, like I expected to rally, around 6 to 1600 mark, that is when I'm gonna look to really get out, because it's gonna pop back up. It's gonna go up and it's gonna come back down. 10% correction. Add to it around 1560, 1530, around those ranges. Those levels. I'm gonna add. That's what I'm planning on doing, because of all the news that's going on here. So this is when he's charting. This is his northmanturner.com. That's his. So here's a Dow. With everything that's going on, the companies that I'm looking at, like I said, I'm looking to buy. I mean, I already have some on the options trading. I'm still doing on Robinhood because it's free. Make my money there, then buy stocks here. Buy stocks in the E-Trade, free, commission free. I recommend Fidelity just because it has the biggest asset class, there. So we had GDX. All of them ended in the green overall, which is great, except for VGZ. It's not that, it's 78 cents. You want to buy something, you can buy that one. If you want to just try it. So AUY, reported earnings, like I said, it beat. It beat on earnings. It went up 150. It beat by 150%. So there's a V, and then all the way up. This one has a channel. This one has a channel. This is basically the channel. There's a low. Where's the low? Oh, here it is. 296. 296 was the low. And then it bounce, goes up, goes down, go up, go down, go up. The furthest I could extend the thing was 1,000 days. Damn it. What was the other one that did? The other one that I really liked that's in report earnings is KGC. I believe this one is, I'm almost on 1,000 days. This one I want to do that. 336. Apply. Okay. Okay, so when you look at the macro indicators, it's turning green. September, it had a little peak. This one, when it got here, it got to 1540 something. Right here. Let me bring it in. So when they got this little peak here, is here. They got to that level, 1525, 1530, 1540. This is what I told my brother to sell. Because he had it from October 26th, contracts. I'm like, you gotta get out of it. He sold here, which was great, because then it took a dip. If you look at the macro indicators, they were down, selling. It just turned green. Based off all the news that's going on with the world, everything I showed you, it just turned green. AUY also just turned green. A lot of them just turned green. And it could stay green. And it will stay green in my opinion until it gets to that level where it's gonna sell off. And gold goes to 1550, 1560. You might start seeing a little red in there. It's before good, but it gets to 1560 in a pop, and the Federal Reserve cutting rates on October 29th, 30th. That's when I'm gonna sell, because that's when the contracts are gonna be worth the most. So the channels on these are still the same. What the hell going on? Dude, you gotta be kidding me. There we go. Not perfect, but to give you an idea. So if that's the low, supposed to pull it back a little bit further. So that's a $200 day moving average. Bring it across. Bounced off this line. 1440. So the volume is increasing too. That's the other thing you guys need to look at. The volume is increasing again in this miner. Like I said, I believe it's gonna go up 1550. It hasn't been able to break that resistance in a long, long time. This is a 52-week high of it. 546, that's why it's like that. If you were to make a pattern on this. Oh, I need the pan. Pan. Yo, what the hell? No, I don't want to do that. Cause I don't think I'm gonna be able to bring 239. That's when it came up. That's when I bought it. The thing of it is that it's staying in this range. It's gonna stay. It's gonna keep bouncing like this back and forth until it breaks out. The breakout point is gonna be above this line, 1547. And this is only gonna come through, in my opinion, it's gonna come in through the Fed cutting rates this time. Same thing with gold. Barrick gold. Same exact thing. Everybody's pattern is the same. Macro indicators all the way at the bottom. If you want to buy it, this is probably it. You buy it, it's turning still red, but eventually it'll come back up. This is a relatively stock strength. So it's turning back green. When the Fed cuts this, it's gonna have a big pop. Yo, what the hell going on with my thingy? Now I could use a pan. Clearly still need to get better with this. But here's the bottom on this one, here's the strength. Dude, what? Why can't I scale it? Oh, I hate that I can't do it right now. Damn, I need to get better with this. Well, let me do it on the other one. Newmont reports earnings. They all report earnings. Every single one of them reports earnings soon. This one does it on the 6th. So you'll get the news of the earnings from them. If you buy the ones on November 15th, their earnings, all the news from Brexit, all the news from the Federal Reserve, the cuts. You'll get all of that. And that's not letting me scale it. The volume again, and this one is turning green. As you can see, it's turning positive. It's turning back up. Here it is at 70. 70 is over. So you keep an eye out. So if you want to let go, just play it. You obviously got a lot of room to grow. And it'll most likely be here around the $41 mark. Right now it's trading at 39. AU. Oh no, it's AG. This is silver. Again, it turned green already. It's popping up, sticking out its head. Those are the old levels that I had on it. I had this one earnings on the 7th before market. So the other thing you could do that I've been doing is when they report earnings, if they do poorly, boom, they sell off, and then I'll buy it. If it goes down 5%, I'm gonna buy it. If it does go down 10%, I'm a big time buyer. But I'll wait it out until the end of the day to see where it bombs out. And the news breaks out, and then it'll obviously go back up. Gold. So the 1162 was a high. I have calls on this one for 12. I don't ever breaks out, it'll probably test 12, but I'm gonna be looking to get out of it around that time. 1150, 1160, 70 cents. I'm gonna sell. Because I don't need to hold on to them for that long. If they report good earnings and the Fed cuts, well, the Fed cuts first, then they do earnings. We're in business. So those are the ones that I'm looking at. If you want to get a good ETF and just play all of them, GDX is a great one. So 30 is the one, you know. So you want to buy out of the money calls, buy them over 30, 31, 32, but no, understand that once it gets to 31, you should be selling, looking to sell. Because on that day, this one's reporting because it's just an ETF. It has a bunch of other gold stocks in there. And that's what I'm doing. This one, again, it just turned positive. It still has room on the strength indicator. So you just got a lot of room if you want to pick any of these stocks. With all the news that's going on around the world, you'll be fine. This will be the time for you to buy any of them, silver, gold, PAS, any silver stock, even HL. HL has been doing horrific and it's a $2 stock. It's so bad, all I have to do is report that it's doing something fine, okay. Just okay. And they'll be fine. But if you get a chance, guys, you just need to look into this, you know. I'm just bringing up everything from my view, what I keep up with and trying to explain as much as I can with you guys. To educate you guys, put you guys in a better position to make your money. I gotta keep practicing with the Thinkorswim platform because I haven't been able to use a computer since I haven't had internet for a while. And when I had internet, I tried to test it out. I had AT&T and got that fixed though. Doing great. We don't lose frames anymore. So again, going forward, I'm gonna start doing the streams for financial news. When I'm looking at the stocks, what prices I'm looking at, gold, you know, value companies, stable companies. All these things that I'm looking at, I'll let you guys know. There's a bunch of news that's going on around right now, but I've tried my best to keep it all in there. Now we're trying to touch on the biggest corporate, the Federal Reserve, what they're doing, how poorly they're going to do in managing all this, and the dollar, you know, eventually the dollar will come down. When the dollar comes down, it is game over. Year to date, That was the peak when they cut rates. 99. They cut rates. They went up. Happens. Dollar came down recently with all the news events that's currently going on. I believe it's gonna keep going down lower and lower and lower. So guys, remember Monday, Wednesday, Friday, not Friday, Saturday, around the weekend, I'll do the news, an hour of news. Streaming games and all this other stuff that I do will be on the weekend. So thank you for hanging out. I appreciate it. I hope you guys learned something. Okay, we're gonna Thinkorswim platform. But educate yourself, read a little of the things I have, if you want just somewhere to go to Twitter, go to Zero Hedge, and you can read their articles. They keep you informed. Alright guys, thank you for stopping by. See ya. Happy trading.